Good morning, good afternoon, good evening. It's yours truly, Pradias Grove, and on behalf of Andrew Ibrahim of Signature FX, we are Signature FX. Thank you for tuning in. Going to start off with a quote because that's what we like to do for our videos. And the quote for episode 5 is, "The genius of investing is recognizing the direction of a trend, not catching highs and lows." And this particular quote is important because of this video, and this video is a Euro USD technical analysis. And we've been watching Euro USD. We actually posted a Euro USD signal on our Facebook account. We're going to give you that social media information at the end of this video. But it's important to remember that you want to try and find the trend in your favor and follow the trend in your favor. The trend is always going to be your friend, obviously, until it's not. So this video, we're going to break down a Euro US dollar position and analyze Euro US dollar. Andrew Ibrahim, who is co-founder and owner of Signature FX, co-owner with myself, Pradias Grove, did post on Facebook that provide a little bit of background on the indicators, and he mentioned parabolic indicators. So I'll go through a little bit, trying to get 2 videos done on this Saturday, so I'm calling it the 2 for Saturday. But this is the first Euro dollar video, so I'm going to try and keep it nice and tight and get it done quickly so we can get it posted. But I want to thank all our followers and all our loyal fans and traders. We're here to try and make your job easier and to help you to become a consistently profitable trader and maintain that consistency, and implement discipline, and instill dedication within you. So let's dive into this chart here. So we got the Euro USD here. This is a monthly chart, and try to zoom out as much as possible for you when we start it up. So as you can see, we're kind of like, it looks like we're a bit in a 3-wave. We had a bit of a stall within this 3-wave, Elliott wave theory, mind you. So this is kind of where we've come from. These lows essentially were the most significant lows at 103, and now we're hovering around 120, in and around 118. So what we want to do is we want to try and ride this wave as high as we can, but in doing so, we're going to be mindful of what the bears are doing. Okay, so when we have a look here, just a rough Fibonacci, you can see bears are essentially giving up this 23.6. You know, it's, once we get a little closer, it'll be a little clearer. This 23.6 from the bears' perspective has pretty much been forfeited. I mean, I think they've had to kind of admit defeat, and now what we'd like to do is find a way to enter within this move upward, and profit on that, and have a nice position up to this 38.2. So the next stop on our analysis is going to be 38.2, which is 1.25. Now the price may go up to 1.27, or it may hit 1.24 and just stop there and drop back down. We don't know. But as you can see with the initial test of this bearish 23.6 level, we pretty convincingly got a nice push through higher before we had a retest of it and it became support. So let's look at where we're going to enter, and let's get these indicators involved, as per a request from Signature FX's Andrew Ibrahim. I just want to make it known that Signature FX is Andrew Ibrahim and yours truly, Pradias Grove. Okay, let's dive in a bit. So if we're going to get an entrance, we got to look a little closer than the monthly. Weeklies strong into here. Okay, we're using the Bollinger Band. This is the lower end of the Bollinger Band, and this basically gives us an idea of where we would want to enter if we're looking at it from a weekly perspective. Weekly is over here selected. This is MetaTrader. So Bollinger Band kind of telling us, look, 115 is quite a significant low. We also have something that we call the alligator, and we use 1385. So when the green is on top, it goes red, gold, and green. Green is on top. That means that we're in an uptrend. And then when green is on bottom, we're in a downtrend. Okay, so these levels just give us an idea of where we want to be, where price usually normalizes and where price usually balances out. Okay, we also have some moving averages in here. If we can go a little closer, moving average. So this is a 21-day moving average here. This gives us the average price for the last 21 days. Okay, and that's at around 116, and that's the blue line. And lastly, we have an 8-day moving average. So sometimes the longer moving averages give us a bit of a lagged piece of data. So we want to get a little more micro, or a little bit more in depth into the chart. And so this 8-day moving average is going to tell us the average for the previous 8 days is around 1.179. Okay, and these are just guidelines. I wouldn't trade simply off of them like we looked earlier at the monthly. This is really where our motivation is coming from. Okay, and this is just looking at a chart and saying we have this low, we're looking into 38.2. Where are we gonna enter? Where are we gonna get in? Okay, you can see on the monthly all these indicators are essentially changed, basically updated or revised for this change in time frame. And you can see the top end of the Bollinger Band here is around 121.57. So we want to get in before we test this 121.57. Closing price on Friday was 118.91. Another good indication is when you see one moving average cross over the other. So you can see here the white 8-day moving average crossed over the 20-day moving average, the blue 20-day moving average, which gives us a good signal that we're looking at a pretty strong bullish move. These dots here are parabolic SARs, and we use 0.02 and 0.20. These essentially, what I use them for is to tell me whether or not we're in a bullish trend or bearish trend or uptrend or downtrend. So when you get the parabolic SARs underneath the candlesticks, you're looking at a bullish trend. This is showing support at these lower levels. When you get the parabolic SARs above the candlesticks, this is a downtrend. Okay. We can go into Fibonacci in other videos. I'm trying to keep this video nice and tight, so let's just dive into the entrances where we're going to get in. Okay, so we're looking for a support level based off of where the previous price action has been. Okay, just looking strictly at price action. And if we're looking at strictly price action on a daily chart, strictly price action, let's see here. We can see from a daily perspective that this high here has fairly well been covered, right? Has fairly well been a significant level. Okay, but if we go all the way to the right, you can see the price is actually underneath that. So we want to get in below the market price. We don't know what price it's going to open at on Sunday night, but we want to try and get in as low as possible. You want to buy low and sell high. So we're going to go to this significant level here. Okay, and the reason for that is you can see it's resistance here, it's resistance here, its support here, support here, becomes resistance here, resistance here, definitely resistance there, and support here. Okay, so 118, one spot 18225 is where we're going to enter our long buy limit on euro US dollar. And we're going to put our stop loss underneath this action here. So it's going to be underneath this 23.6 comfortably. And it's also going to be underneath this price action here. All right. So just to summarize, the market closed on Friday at 1 spot 1891. After our analysis, we found that this yellow line, horizontal line at 1 spot 1822 is a good support level. It previously was resistance and held up as resistance more than one occasion, and now it's seen as a support level, 1 spot 1822. Lastly, we're placing our stop loss for 1% well below this 23.6 level, and also below this price action here in early November, the early November lows at 1 spot 1539. Okay, and what we're going to do is, once we enter into this position at 1 spot 1822, if we see the price action head higher, what we're going to do is we're going to actually bring our stop loss higher. Okay, and we'll probably bring our stop loss above break even, so that the worst that could happen is that we break even. But what we're looking for is a break of this 1 spot 2092 level. So we want to see the price action continue higher this way. Once we get a positive move upward, we move our stop loss higher to lock in any profits, and then we'll reassess the situation. Thank you for listening, and we are Signature FX. Signature FX is yours truly, Padias Grove and Andrew Ibrahim. We also want to take a moment to just reflect on what we've been through and what we've done. We've come quite a long way, and it's not only about business. It's not all about charts and facts and money, and it's not only about business. We like to have fun as well, and part of our fun is our social media. So please feel free to friend us up on Facebook, Signature FX. We also have an absolutely free Forex signals service that we offer absolutely free, just like all these YouTube videos. And that account on Facebook is free Forex signals -SFX. You can also follow us on Instagram, signature.fx, and feel free to follow us on Twitter. SignatureFX is our handle. From all of us here, Andrew Ibrahim and myself, Mr. Padias Grove, we'd like to thank you for your time, attention, and we hope that you learned something from this video. Please feel free to share our videos, comment in the comment section below with any questions or any suggestions or anything you'd like to see. Also, make sure that you like the video and subscribe to our channel. Once again, it's our pleasure to provide you this service absolutely free. My name is Padias Grove. My partner with Signature FX is Andrew Ibrahim, and both of us thank you for your time and attention. As I always end my videos, I'd like to say, have a wonderful week and pleasant trading.